$5. It's pretty clear, it's pretty obvious that something behind the scenes is breaking. We know that the lease rates have exploded. We know that the borrow rates on SLV have exploded. We also know for the last, 5, 6, 7 years, silver's been in a deficit. With the Green New Deal, there's so much silver that needs to be used uh, for solar, for all the applications. And at this point, you're looking at a $400 million or 400 million ounce deficit on an annual basis, and the global production's 850 million ounces. So, in order to bring this market back into equilibrium supply-wise, they've got to either increase supply by 400 million ounces or decrease demand by 400 million ounces. And the way to do that is you raise the price. The price will ultimately bring it to equilibrium. But what is that number? Is it 100? Is it 200? Is it $500 an ounce? Who knows? But the number is higher, much, much higher.
I wanted to kind of get into the failure to deliver. You're talking. You brought this up last time briefly. You said, December is the big month, and there are people standing to deliver. I'm paraphrasing, right, but they're standing to deliver at rates we haven't ever seen before. Tell me about that. Are we seeing a big lineup of people standing for deliver, saying, no cash, no, roll it out here. We want the silver. Is that what we're seeing now?
Right. Well, what stood for delivery back in for the month of November, it increased steadily during the month, and then this past Friday, which was first notice day for December on COMEX, the rumor, and I've not seen proof positive of it, but the market is acting as if it's real. The rumor is that somebody is putting a $20+ billion order, which would mean 400 million ounces. And I mean, if that's the case, that order obviously cannot be met, and that will create shark infested waters. It'll be like piranha.
So that's outrageous. That's just here in the beginning of December. I mean, aren't other people going to say, "Whoa, right, I want to stand for delivery too"? No, I want no, right?
That's what I'm talking about. Piranhas, exactly. If somebody stands for delivery and it looks like it may be difficult for them to get delivery, then everybody's going to stand for delivery because they know that their contracts are worthless. This is something that Jim used to talk about. Jim Sinclair, my past partner. Jim talked about this all the time, that at some point in time, he believed you would see gold bid at $50,000 per ounce, nothing available for sale, but the COMEX futures, $10 an ounce offered and no buyers. And that's the definition right there of a contract that cannot perform. It goes to zero.
Explain that. 50,000 an ounce is the bid, but $10 for a contract. What does that mean?
Well, it means that people want to buy physical metal and nobody willing to sell it. And the powers that be want to sell paper metal and nobody wants to buy it.
And so what about this silver thing? You've always said that silver would blow up. Let's talk about, let me just finish this gold thought. I wanted to show this to you real quick because I saw it on Zero Hedge and I thought, wow, that's kind of telling. It's a sponsored post, or it's a paid for post, but still, gold 5,000 an ounce. That's what they're talking about now, 5,000 an ounce. And a couple of years ago, that'll never happen. And now at 4,200 an ounce, whoops. Right. Surging flows and market still massively underweight. Gold is only 2.8% of investors' AUM. Imagine at 4.5%. I mean, are they right about this, or are they lowballing it?
Well, Greg, that's a nice headline, a nice chart to show and saying, imagine if it doubled. Well, you've got Goldman Sachs, you've got JP Morgan, you've got all these major brokers out now saying, no more 60-40 split for your portfolios. We recommend 60-20-20. In other words, it used to be 60% stocks, 40% bonds, and now their firms are outright publicly recommending 60% stock, 20% bonds, and 20% gold. Can you imagine what the price of gold will? Well, first off, the supply would completely run out if people follow that and start taking 20% of their portfolios, putting it into gold. That will blow the markets up on its own.
You're any way you cut it, and is this part of people are running towards? Why aren't they running towards Bitcoin or stocks, or of course we're at near record highs for stocks and bonds? And why the big drive for gold? And we're going to get back to silver in a minute, but why the big drive for gold? Do they not trust the collateral? Do they not trust the bonds?
Exactly. What the reason investors are running to gold is because it's the only asset, that and silver, that you can put on your balance sheet that has no liability. It's no one's liability. You don't have to trust anybody. If you have an ounce of gold in your hand, you have proof in your hand that capital, uh, labor, and equipment have already been used to make that coin. Whereas uh, if you put treasury bonds or euro bonds or whatever, you put bonds on your balance sheet, you have to make sure, or you have to worry whether the issuer is going to default or not. Gold can't default. Silver can't default. It's God's money.
Wow. And back to silver, this delivery, what do you suppose is going to happen if that rumor is true that there is a $20 billion order for silver and that they are
Yeah.
going to stand for delivery? What is going to happen at the end? What kind of wild price swings could you see in silver and gold too? What do you think could happen?
Well, I think if that gets confirmed, that one day you'll see a huge spike, but markets won't open after that because that will cascade. What'll happen is all the COMEX contracts in both silver and gold will default, and that'll spill over to the rest of COMEX, to the rest of the CME, uh, which has got contracts on U.S. Treasuries, on stocks. They have contracts on everything. But if they default on silver contracts and that spills over to gold, how much trust are you going to have on contracts for pork bellies or for stocks or for? There's derivatives now on the weather, on temperature. There's derivatives on anything you could imagine that you want to bet on. You can bet on it today.
Boy, I'm going to talk about my sponsor
And
here
there's
real
over
quick.
2 quadrillion, by the way,
2 quadrillion in
in
derivatives.
derivatives outstanding.
Wow, what could go wrong, Bill?
Huh, exactly.
Let me talk about my sponsor. This is a deal. I think this is a deal. This is the ivermectin at the Wellness Company. It's an 18 milligram pill. They're selling it with my 15% promo code at about $3 a pill for 18 milligram. If you're seeing this Tuesday night, you can get 25% additional 10% off, which is unbelievable. If you take a look at places like ivermectin.com, who are very good and have many good drugs that they test for potency and for performance all the time and for how much you get. This is why I'm comparing ivermectin that the Wellness Company has to somebody very good. You can't beat it for an 18 milligram pill. You're talking about something that's cheaper than an 18 milligram pill, cheaper than you could buy a 12 milligram pill for. And this is right now with the deal with the Cyber Monday extended sale. Now, if you don't get the extended sale, then you still have 15% off, and it's $3.03 a pill, which is an unbelievable deal for an 18 milligram pill. And the reason why I say it's a deal because it's made in the USA. It is 18 milligrams. It's anti-parasitic. It's anti-inflammatory. It's been used for cancer. Lots of information on cancer for the ivermectin capsules. It also for spike spike injury, vax injury caused by overproduction of spike proteins. It binds to spike proteins, removes them from the body. This is an unbelievable deal, folks, especially if you get it on Tuesday night. If not, it's still a deal for an 18 milligram pill at the Wellness Company right here. Promo code is USA Watchdog, but during the Cyber Monday sale, it's 25% off and all kinds of other deals on the site. Back to Bill Holter. I wanted to talk about this, Bill Holter. And I know you're factoring this in, but boy, it's dicey over in Ukraine. And they are really getting ready to light it up. But the President Trump, is trying to put the kibosh on the war. And this is Putin saying he's ready for war against Europe if attacks on Russian tankers and energy continue. Now, I think the president is setting him up, and I've had Martin Armstrong on, setting up Europe to say, whoa, you don't want to have a peace plan? Fine. Putin's actually also said that the Europeans are intentionally trying to gum up this peace deal that Trump's trying to do. And so I'm wondering if Trump, and this is what Martin Armstrong says too, that he's saying then you should cut NATO loose. They don't want to have a deal. You should stay out of that war. You'd be the best president. What could happen if they do end up having a war in Europe where Russia and France and Germany and Spain and the UK all attack Russia?
Yeah. Well, first off, let's just go back to let's go back 10 years to 2014. That was basically a U.S. sponsored coup.
Yep.
So what's going on now? We laid the groundwork for it 11 years ago. Now, Putin has finally had enough. I mean, the United States. Again, if you go back and look at a chart of gold, it started moving higher like a tractor in first gear. The day after the United States sequestered $300 billion worth of U.S. treasuries. So basically, we stole their money. Central banks from around the world started offloading treasuries and buying gold. They're trying to move away from the dollar. Now, there's been 4 tankers that have been lit up, 4 Russian tankers that have been lit up, and Putin is saying if it doesn't stop, we're going to attack Europe. And I think you're right, Greg. I think Trump is going to tell, because it's pretty obvious that Europe is trying to get in between and ruin any type of peace deal. I think Trump will walk away from Europe, walk away from NATO, and say, you're on your own.
The reports are that
I think that's the danger.
The reports are that he's threatening to no intel with Germany, no intel with right. Sharing any intel, no weapons. That, listen, you don't right. do this deal, we're out. And that's we said that in the White House a while ago. It took him a long time to get out, but you don't sign a peace deal. And Trump said we're out, and we may be looking at we're out here.
Right. Well, it's simply because they're trying to scuttle the peace deal. I mean, there seems to be good faith on Putin's part. There seems to be good faith. I mean, Trump, I think, wants this war to end. Zelensky's got to be an idiot if he doesn't want the war to end, because his country's being disintegrated. But Europe does not want the peace deal. So if they're going to try to get in the middle of it and try to undermine the peace deal, then I mean, what other avenue does Trump have other than to walk away and say, you're on your own?
I find it hard to believe.
And just remember that Europe has basically no standing armies. I mean, yes, they do, but it's nothing compared to what will come rolling through. If the Russians start rolling through Europe.
Well, I mean, what would Trump do then? Oh, you don't have a peace deal? Okay. Oh, well, looks like it's nuclear war. I mean, that's what he's going to do? I don't think so. I think it's the writings on the wall. You see Putin saying Europe, not Europe is doing this. What would happen to the U.S. economy if he did sidestep this deal? I mean, listen, if Europe gets attacked, the whole world's going to suffer, correct?
Oh, yeah. I mean, the world is walking a tightrope in so many different areas. I mean, monetarily, the fiat money system looks like it's about ready to implode. From a fiscal standpoint, you've got central bank or not central bank. You've got sovereign treasury after sovereign treasury that is basically upside down, insolvent. So if you get something unexpected like Europe being invaded, uh, markets can't. There's no way markets. My thought process is you will see markets close.
Wow. Well, Martin Armstrong, in his he played the video of Socrates. He said, I'll tell you what. Here's what Socrates says. That he says they think there'll be nuclear war, but it'll be tactical nukes. What happens if all of a sudden that he shoots a missile into the Eiffel Tower, or he shoots a missile into the financial center in and I hope that he doesn't do this. But if he starts hitting some key targets in the European capitals, will they continue to want to? I mean, their bond market would implode, would it not? I mean, the whole thing would just go down.
I think you would see pretty much all bond markets implode. The world is not ready, or financial markets are not ready for anything like that. And I don't think the psyche of the population worldwide is ready for anything like that.
You think that all these, I mean, all these banks over in Europe, I mean, all these, they seem like they're in big trouble. I mean, they have Commerce Bank. They tried to merge that bank, and they couldn't do it. And the most systemically dangerous bank in the world, Deutsche Bank, and they never
Right.
retracted that. I mean, that's another whop. Germany, all the towns they say in Germany, most of them are facing bankruptcy. Martin Armstrong was on
Right.
here saying that Germany, the big engine of Europe, is 3 or 4% negative GDP. What should people do? I mean, you're saying that the risk is of the cataclysmic proportions. Am I wrong?
Right. Well, I think, I've spoken about this. I've talked about, failure to deliver leading to a derivatives meltdown. And that's where we're headed. We are headed for a derivatives meltdown. We're headed for market closures. And, I've talked about this many, many times. People ask me at the end of interviews, so what do people do? You've got to get out of the system. You've got to get your capital out of the system because when the system goes down, your capital is going to go with it. It's going to, the laws are in place. Read the Great Taking. It's 100% real. Those laws are in place on the books. The ink is dry. They did not put those laws on the books not to use them. They put those laws on the books to take everybody's assets.